Hello guys, welcome to the Train Parrot. After we saw yesterday the price of Bitcoin bottoming at 53.6, the price bounced very quickly and met with the first level of support of the CPR monthly, finding as well resistance at the low of the 1st of May, located as well at 56.7. And that's currently the level that is holding the price for the past day. So the question is, are we going to see a rejection here and further downside, or could the price use the weekend to punish a little bit the shorts? Because let's face it, they're very overexposed right now. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And if you feel like supporting the channel, watch this video until the very end and do not go anywhere without leaving a comment down below as well, because that's really helping the channel to continue growing. And guys, have a look at the description below. There's a link to open an account with Bybit and claim up to 30,000 in rewards. And even if you already have a Bybit account, you can transfer your account to my referral link and then opt for up to 70% discounts in TTP memberships that give you access to loads of perks, including a library of almost 200 different Pine scripts that I use for automating my bots and navigating the market, signals, orchestration signals for bots, pair selection, and a lot more. To claim the discounts, join my Discord server, navigate to Bybit perks, and connect your Bybit account. There's also instructions right there on how to transfer your Bybit account to my referral link. We are starting to see a day of a little bit of green thanks to the bounce on Bitcoin, moving towards that 57K. That is the typical thing to happen, to see a stronger bounce on the altcoins. But the question is if this is going to be longer lived and we're going to continue going higher, taking some of the shorts, or at what point could we be aiming for that 51K that offers a lot of juice and support, as I explained in my video from yesterday in full detail. What we need to consider today is number one, that we are on a weekend. The closing price of the CME was 56.6. The price on spot is moving just around this price, not creating a larger gap. But let's face it, if the price was to punish the shorts and go as high as even 60K, that will generate a massive CME gap, and that will attract the price to come back down and close the gap. But if we were to do the opposite and the price was to dump from here and take the 51K and on Monday opening somewhere around there, that will attract the price to come back up to close the gap in the opposite direction. Unfortunately, closing the week in anywhere here will trigger a lot of additional bearish signals. We much rather closing the week candle above 60K and then coming back sometime during the week to close the gap and then bounce back up. That will be really bullish. Whether we can achieve that or not, we will have to see. Second, right now we are being held by this first line of support from the CPR monthly. We have three lines of support. One is located at 56.8, followed by 51, and the last one is 43K. Can we get to 43K? I'm going to show you one way, just looking at the RSI on the 4-hour time frame, and we can see that after this breakout, if this was to come back and retest this line, this means that we will make a move from 38 on the RSI 4-hour all the way to 13, because that is the only place that we can touch this right now. And if we were to go to 13 or 14 on the RSI, let's say 13, in the price, that will pretty much coincide with 44K. For those of you that are thinking that is very difficult, this is the proof that only a move like this on the RSI will bring it very quickly. So what do we need to happen for the price to prevent that? I think the line in the sand to turn back into bullish mode right now is for the price to conquer the pivots. We need to conquer above 65K, and to turn very bullish for the months to come until the end of the year, we will have to right now not just conquer the pivots, but also touch the first line of resistance, which is located at 70.5. At that point, we will have liquidated over 13 billion in shorts, and that is all the propulsion that we need in order to resume the bull market. It sounds like a very tough job to do right now, but I'm being totally honest and I'm bringing you the information from this model, which has helped me to navigate the markets for a very long time. If we go now back into the daily, we can see that the cross-V ratio is saying that we are in 1 out of 3 opportunities that we have in the whole bull market to re-enter. One was here at the bottom of the bear market, the second one was at 25k, and there are no further opportunities to enter this low in the cross-V ratio. But unfortunately, the RSI keeps putting lows, so this wasn't necessarily a bullish divergence. We will have to move this line here and hope that the RSI from here completes a pivot in such a way that we can say that this is now a bullish divergence. I remind you that the RSI could still move lower here, in which case we do not have a bullish divergence yet. Looking at the delta, I feel like we are starting to build some structure where the longs are starting to step in slightly more that we've been seeing for over 24 days. We saw this spike here that took the price from 53.8 to 57 almost, and then the shorts stepped in, but we are still above the breakout area, meaning that this didn't wipe out all the longs, protecting this progress and potentially being able to push the price slightly higher. One thing that I wanted to cover in this video is to look at all the times that we were in a bull market and we were pushed below the bull market support band. You can see in this bull market in here very early in the history of Bitcoin, pretty much never we were below it for longer than a week. In this bull market here, we spent a couple of weeks below it. There are lots of similarities between 2013 and the current bull market, so it's very important that you keep a close eye and you study the bull market of 2013 to find those patterns that are playing out very closely. In the bull market that took us to 20k in 2017, we spent very rarely below the bull market support band, and once we broke below it, that was the start of the bear market. In the previous bull market, there were loads of anomalies because of COVID. We ran very high here. We were very excited to go very high, but with COVID, that dragged the whole price from 13k to 4k, and that was very painful. In multiple times, we were below it for longer than a week, but still, after that, we managed to make a run of 1,500% from bottom to top. And in this current bull market, we have spent a couple of times for very short, and then many weeks in here below it once again. Every time that we spend below the bull market support band, even if we start a bear market, there's always some bounces where we stick our heads right above it just before dragging the price back below it. And I'm not saying this is the beginning of a bear market. No one knows. But even if it was the beginning of a bear market, we should be able from here to come back and stick our heads slightly above it, and if we were to do such a bearish move, then from here get a rejection. So that will take us back into 66k. I believe that we are able to do much more than that, but if we were to go bullish after a long wait, we could do that, see some rejections from here, and then reclaim and resume the bull market later on. All those scenarios are not impossible, and you need to be prepared for those. Today, the Fear and Greed Index is printing a new low at 26. Yesterday, we have 29. So in my opinion, we have to be prepared for potential new lows to come in the price. Do not discard those events and put your stop losses right below where we are, because you're taking a lot of risk. And I'm not saying these things just to tell you do not buy Bitcoin right now. I do hold Bitcoin and I will buy more in case we go below 51. Unfortunately, the big whale explorer is printing a new high in terms of the ratio between large holders depositing versus withdrawing, which means that many whales are currently depositing at a faster pace that they were doing at 72k. So this is pretty concerning. We do not know whether they're going to sell at these prices or if they are preparing to see some bounce, punishing those shorts, and then selling into the market at higher prices. This could come from empty gogs, from Germany, from the miners, or a combination of all of it. But this is a high risk environment. Anything can happen, to be honest. But it's high risk at the moment to count on it. The exchange inflows are increasing as well. We can see here the 50-day moving average, and the long-term holders are mildly selling. In terms of fair value gaps, we have this incentive for the price to come here to punish some of the shorts up until 65K, but we are also very close to the liquidity that could easily take us to 50K. If the price doesn't manage to hold here, we have loads of liquidities that can take us to the 43K as well. And yes, if price goes to 70K, it will liquidate 13 billion of shorts, but we need to find the momentum to do that. And at the moment, there is just not enough momentum to do such a thing. In fact, I bet that there are loads of whales that are waiting for slightly juicier prices to dump on us. I will much rather see those whales exhausting that selling pressure right now, take the price as low as it wants to go, buy as much Bitcoin as I wanted to buy after selling at 73K, and then resuming the bull market rather than having to go to sleep every day thinking that they still have that selling pressure and the finger in the trigger throughout the rest of the bull market. If we go to 100K, the impact in the market cap of that selling pressure can be a lot more deep. Our support at 52K in FAR charts, we can see that is still not as light as we need it to be to have an impulsive move. And in the order book, people are pushing the price very humbly here, but immediately they're putting a sell wall right above 57K. We want to see those guys getting liquidated, reducing this open interest, and seeing the longs stepping in quickly. But so far, I'm not seeing that. And today we are out of Bitcoin season. We are at 27 in the index, but do not get confused. We can flicker between non-Bitcoin season and Bitcoin season still for a little bit longer. This is only because Bitcoin bounced and some of the alts are showing some recovery. But this recovery that you are seeing in the daily is still not undoing the damage that we have seen for the week and for the month. There's a lot for the alts still to prove that they can have an altcoin season. One thing that looks really bullish is on the total three, this pattern that it managed to bounce right at our level of support. Support is always scary because if you lose support, you could enter into a bear market from here. But at the same time, this pattern is quite bullish because if we bounce from here, we could have quite a nice relief move in the RSI here. What's not very bullish is to see this breakout of the USDT that, although is starting to look a little bit toppy right here, which could potentially bring back this for a retest before maybe moving higher. But seeing that since June of 2022, we never broke above this, and right now we are holding pretty decently, is still part of my concern. What I would like to see is that if we put a line like this, it will be awesome to see that we break not just below this white line, but also we come back into this range, and this just becomes a fake out and we can complete our journey into the bull market. Yes, guys, and although the Bitcoin dominance managed to stick for a few days above the white line, we're back below it once again, and we still don't reclaim any of these trend lines in the RSI, meaning that there is a potential for a comeback in the altcoins, just because they've been punished so much, and also because we are right at the weekly support. You can see this line in red here that is currently supporting the market just like it did throughout mid-2023. And right after that, we saw a 140% move to the upside. I also want to mention the active address sentiment indicator, which is on-chain data that is really useful to forecast tops and local bottoms. You have these bands in red and green that tell you where you are at each of the extremes. If you're below the green, it's a great area to accumulate. But be very careful because there are some exceptions. On-chain data can take quite a long time to play out. For example, here, when we move from 63 to 28K in the bull market of 2021, we spend a lot of time below the green. And right now we have crossed below the green, but the price might still move a little bit lower while we are here. In fact, the conservative signal to re-enter the market is when we cross above the green line. And we are still pointing down, so we could move slightly lower. But keep an eye on this because we are entering into the value area, which attracts lots of whales to start accumulating. The thing that is concerning me a lot is the stochastic RSI on the monthly. Here we have the whole history of Bitcoin, and you can see if you align your eyes with each of the bull markets, and I'm going to highlight it here. You have one bull market, one bull market, one bull market. Once you cross below this level, you can still make higher highs. I told you that 2013 bull market looked very similar to what we could be about to see, which is you top out with the first time that you are at the very overbought area, and you do your final peak on the way down of the stochastic. Once you reach the very oversold on the stochastic, there's no doubt that you are in a bear market. So what we could be seeing here is potentially seeing a bull cross and a final move like this that takes us back into a bottom right here. And that could come together with a move of the price to 100 and something K, and from there you start entering the bear market. Something slightly similar happened in 2021. We have one peak here, we crossed below it, but we never made it to the fully oversold area, and from there we saw another push into here. But that wasn't the top of the bull market. The top of the bull market came once we started moving lower from here. The bull market of 2017 was a very clean one because we stayed pretty much in the overbought area for the full bull market, and once we started coming back lower, we were in the bear market. I had to give a thanks to Crypto Crew University because I've been watching these patterns from him. One thing that is quite bullish is FTX paying their creditors. This means 16 billion in cash that might hit eventually the wallets of crypto investors from the previous bull market. So there is a likelihood that they might decide to use that cash to buy some additional crypto. But the assumption is that they didn't get burnt enough after the FTX collapse and that they are still interested in investing in crypto, which is quite a strong assumption in my opinion. And one of the biggest concerns that I have right now, and which is the reason why I keep monitoring the S&P and NASDAQ, is because it's looking really toppy at the moment. I continue to get the bearish divergences and signals that are calling out for a top on both of these indexes, and crypto tends to follow what they do. You can see here how many bearish divergences we have in the S&P 500, and we are just about to hit resistance once again. And Benjamin Cohen, which has a magnificent eye for spotting patterns, he also noticed that there is an opposite correlation between the S&P versus crypto right now. You can see how the S&P has been pushing higher and NASDAQ as well, while crypto is selling out. But the same thing happened in 2019, as pointed out by Benjamin, and eventually both took the same direction, but that happened because of COVID. If the S&P was about to top and make a big correction, there's no doubt that this will sell very strongly. And at the point that it sells out, it goes back into positive correlation with crypto, just because both of them are then crashing together. Very interesting. All right, guys, thanks so much for watching the video, and thanks for all the likes that you left in the video from yesterday. We made it to 55 likes. Hopefully today we can break out above 55 likes and 10 comments. I really appreciate all the support, and it keeps me motivated to continue putting out as much value as I can in every video every day. See you tomorrow. Enjoy the rest of the weekend.